So this is the part of the show where I talk about what I believe individual investors should be focused on when they make their investment decisions over the next few weeks. We're going to touch a bit upon economic data. It seems like we're always talking about economic data that comes out and how to think about it and what it can mean for your investing. Corporate earnings. Corporate earnings season is about to start up again in, I guess, mid-January in a few weeks. And what are corporations saying, and how is that going to affect your investments? And lastly, and perhaps maybe this should be actually at the top of the list rather than the third point, is investing or paying down debt. I've had a number of questions asked of me recently, and those were with interest rates rising and obviously interest or the cost of carrying debt rising. Should you be paying down debt at this time versus investing, or a bit of both, or should you just be investing and not worrying about the debt? So we'll touch a bit upon that, but let's take a look at the economic data, shall we? And we have a few charts here that we could show. A chart on Canadian inflation. Obviously, we got some numbers recently today. Inflation rate dropped to 6.8% from 6.9, so not a big fall. Obviously, well above the target rate of 2% by the Bank of Canada. Recently, we saw the U.S. inflation rate as well fall significantly to just above 7%. Again, down from its high of, I guess, earlier in the year of over 9%, but still nowhere near the target of 2% by the Fed. So we got to keep an eye on the inflation data. The other point that I think is going to be really important, and something that I think the Fed, especially Bank of Canada, but more so the Fed even, is focusing on, is the unemployment rate. And I think we have some unemployment data as well. A chart here, Canadian unemployment, you can see has been falling significantly. Many believe that unemployment has to start to rise, maybe 1%, maybe 2%, maybe 1.5% higher from where it is today before we start to see inflation really start to fall. And it's interesting when we talk about economic data, what we always say is, good news on the economy tends to be bad news, and bad news tends to be good news. What I mean by that is any strong data, strong retail sales, strong economic data in general tends to give the Federal Reserve and Bank of Canada the ammunition or the cover to be able to continue to raise rates aggressively. And when we have weaker data, whether it be retail sales or consumer confidence numbers or anything on the weak side, that tells everybody, well, maybe the Fed and Bank of Canada are closer to the end of their interest rate hike. So economic data is very important for everyone to consider before they make their investment decisions. The second point that I had up there on that list is corporate earnings, or what corporations are saying. And the market has been extremely volatile this year. We've had quite a bit of ups and downs. I think I guess my takeaway from what I hear corporations and CEOs of those corporations, what they're saying right now, what they're speaking about is this idea that things are slowing down. There is no doubt, there's no denying the fact that business is slowing. How much is it slowing? That is the question. We just received good corporate earnings last night out of Nike. Nike seems to be taking up expectations going forward. The reopening of China really helps Nike, a lot of business in the Asian area. So that is one stock or one company that actually had a positive situation or earnings outlook going forward. But many more have definitely had negative earnings outlooks. We're going to hear from Micron, a chip maker, tonight, what they're going to say. That's going to go a long way to see how tech performs in tomorrow's market. So I think corporate earnings season, especially the retailers even, coming out of, the Christmas and the holiday shopping, the Thanksgiving shopping over this past quarter, how are companies faring, and are they continuing to sell and make money? So corporate earnings is a big one and a key one as well. And lastly, but as I said, perhaps not least, and maybe even something we should have looked at initially in our list or had it first, is this idea of paying down debt versus investing. And I think we have a chart on that, Canadian interest rates. You see it moving significantly higher, I think, along with the U.S. interest rates. We have a chart on that, I believe. There it is. And you can see how rapidly interest rates have moved up. And as MPP Stephen Crawford just said, that one of the industries or sectors affected by higher interest rates is the real estate market, as we all can imagine. Getting a mortgage right now is very, well, a lot more expensive than it used to be. You would have to qualify for a mortgage somewhere around 7-8% today, maybe closer to 8% to get a mortgage of possibly, 6-ish% right now. I know some variable rate mortgages were 1-2% at the start of this year, and now they're significantly higher, over 4%. So, paying down debt versus investing, I think it's all going to come down to what that interest rate is on your line of credit, or what that interest rate is on your variable rate mortgage, and can you pay some of that down? I think if it's a high rate of interest, yeah, you should look to pay down some of that debt. I would say right now, in talking to individuals, for the most part, I think it's a good balance. If you can pay down some debt and invest at the same time, I think that striking that balance makes a lot of sense to me. Whereas maybe about a year ago, it was put as much money into investing as you can, because money was free at that time. Interest rates were rock bottom. Today, it's kind of moving into that 50-50, or maybe even paying debt down faster or more towards debt than investing a little bit more. But I still think you need to be an investor. I think you still need to take advantage of what's happening today, which are, stocks and investments on sale. So I think going forward, having a strategy of doing a bit of both makes a lot of sense to me.